in general, I think everyone's gonna want to trade Bitcoins. I get calls from a lot of people. I mean, across every age bracket, wanting to know more about Bitcoins. How can they basically ride the wave? Because everyone sort of sees that the market is just rallying and just going up, right? So people see that Bitcoin started at 10 cents and it's now $12,000. And there's talk about it going to $100,000. So everyone wants to get in. So you're going to have retail traders, you're going to have investors, you're going to have hedgers, you're going to have speculators. For the hedgers, it's mostly going to be the miners and people that call themselves whales. They need to hedge their position. Some will, some won't. It just depends on their sophistication, but they really all need to hedge their positions. The miners definitely most likely will, because they are answerable to their investors, they're answerable to their equity holders, and so they would want to hedge their future earnings. And then there are the speculators. The speculators is pretty much everyone, right? Everyone that sort of thinks this phenomenon really is going to keep going. It's going to keep going up. The futures market is going to see traders like they've never seen before trade this product. And come December 10th for the Cboe and December 18th for the CME, I'm just excited to see what's going to happen, because it's going to be crazy. Nasdaq NFX, Nasdaq's futures exchange, they haven't come up with details on their contract. Supposedly it might be cash settled or it might be physical settled. No one really knows for now. They haven't actually come out with a definitive definition of what they're going to do. The CME will be, it's cash settled. It's cash settled on, they call it a Bitcoin reference rates. It's some calculation they do across 4 exchanges. On final settlements, you essentially just exchange cash. CME is not, you're not going to get any Bitcoin. Hopefully, on final settlement, the Bitcoin reference index is in line with the actual Bitcoin market. There's no guarantee. And in fact, we've been observing the price. It's really not perfectly close, right? It's like $200, $300 difference on average. So depending on the exchange you're looking at. So that per Bitcoin. So it's not perfect, but hopefully it sort of converges. The Cboe, on the other hand, they will settle to the Gemini price. So the Gemini is an exchange run by the Winklevoss twins, and so they have an exchange that's obviously trading bitcoins. It's a cash exchange and an auction exchange. So they will settle to the price of the Gemini exchange. The Gemini exchange and the Cboe futures contract, they're a little better aligned because it's going to settle to the Gemini exchange price. So you can essentially just turn around and just buy Bitcoin on the actual Bitcoins on Gemini, because that's the price. Originally, the Cboe said they were going to do the Bitcoin futures in the first quarter of 2018. And last week they announced, well, the first quarter of 2018 happens to start December 10th, 2017. So everyone sort of understands that you need to get in there first. But you need to get in there first and get in there right. I'm not necessarily convinced that either one, actually, the Cboe or the CME, have it perfectly right just yet. But we'll see. The issues with Bitcoin, it's primarily to do with transactions and how long it takes to confirm a transaction and how much you have to pay for a transaction. There's also the issues with basically safety of private keys, hacking. There's too many underlying problems, and technologically as well. Just looking at the code and looking at the way it was structured, it was done for certain reasons, but there's some aspects to the code that really need a lot of improvement. So those things are going to affect the viability and also the confidence people have in Bitcoin. No one should be trading Bitcoin unless you're essentially trading it with money you're prepared to lose. You should always reference the underlying. That goes without saying. And make sure you understand what the underlying entails. So for the CME Bitcoin futures, you have to reference the BRR rate, the Bitcoin reference rates that the CME creates. You can't essentially be watching GDAX or Kraken and saying, well, that's the price. And so the CME should essentially be aligned to that, right? You also want to see the activity on the blockchain as well. The fantastic thing about the Bitcoin blockchain or any other blockchain actually is it's public. Anyone can set up a node on the Bitcoin network and get the data. That's essentially what we do. That's how we get all our analytics. So you can actually get every single thing that happens on the blockchain. And so use that data for quantitative analysis, for research, and sort of understand what's actually going on the blockchain, and use that as a bias as well. So you can always do a cross exchange trade. So it's an inter-exchange trade for the Cboe Bitcoin futures and the CME's Bitcoin futures. And hopefully they're somewhat aligned. If they get detached, you can sort of do a mean reversion trade that brings them back. I'm not saying they will come back. I'm sure it's a strategy that a lot of traders are thinking will happen, but there's no guarantee that the spread between the two exchanges might not just keep expanding or contracting, or who knows what direction it would be. But fundamentally, they should be aligned. And if they're not, you can sort of trade that.